Hey everybody, for March 20, is it 28th already? It's almost April. For March 28th, this is Mark Coe. I wanted to go over some of our levels from last night and take a look at a few new model trades, and wanted to really talk about why these levels are so important and what you can really be doing for you in your trading. So let's start off with the currency tonight. Let's take a look at dollar yen. And so let's kind of look over what the levels have done for us the last 2 days. This is pretty good stuff because dollar yen has broken lower from pre-FOMC above 115 down to the 110 handle. So 5 big figure move lower in dollar yen. And I want to show you the level I've been using for 2 days. So my subscribers have had this level, this 110.15, for 2 days on their screen, which has been pretty special level to trade off of. 2 days ago, we traded down to 110 spot 11, so 4 ticks under, and today we traded 3 ticks above. So that level was highlighted really well. Everybody knew to be looking at it and to be playing it. So this becomes the idea for why we're so keyed in on these levels. It gives us a roadmap for how we want to trade. So even if you're a short-term trader, even if you're interested in day trading only, to have the power of the levels, to know where to look and what the reactions are to those levels becomes unbelievably key. So when you can look at this level and have it diagnosed on your screen, right? So you walk in yesterday and you have this level diagnosed. Even if you're short term, you look at it and you say, wow, that level just held. 4 ticks, held. Comes back again, holds, rallies. That's some pretty good money. That's some pretty good money on a 50-tick move. It's even better today, right? You trade 3 ticks away from that level. Rallies 100 plus ticks, right? 100 plus ticks. That's pretty good 2 days in one currency. Dollar yen. What's 100 ticks worth on one day? What's 150 ticks worth in 2 days? It's pretty good stuff. But you see that across the board. And I think what's so great about laying out your scenarios, laying out your day, mapping it out before you ever sit down to actually deal, is that you have an idea of your playbook, of your roadmap, what should be going on. So the analysis for today, which came out last night around this time, came out Monday night, said this: dollar yen traded below the 110.65 as anticipated, right? We were expecting to trade below 10.65 yesterday, right? Was expecting it. So we got the break. But failed to move below this 110 level. Failed to do it. So now it can use any weakness down from 0980 up here to 1015. Can use any weakness to look for long trades. So we knew that coming into Tuesday. So as the market's sitting 110.55, 110.60 at the open of last night's Asian session, I already know what we're doing, which is looking for any dips in here to get buy side. We know it. That's the plan. And look how the plan played out. It's pretty magnificent stuff. Euro dollar and pound dollar, both of them are still within this larger up move, but as expected, some short-term weakness. Now, looking forward, what does this weakness mean? Well, I still think that until euro dollar, until it really takes out this 7.5, the 750, and you can see even from a shorter term, 760 really holds it. But until you take out this zone, which is pretty big and chunky in terms of buy side, all this is an opportunity to position both for the longer term move back above 109 and even in the short term. Now, on a daily basis, what was there today? What was there today? So I said last night coming into the session there's still some short-term pressure on the sell side. And all it was finding an edge to deal against. That's all it was. It was short-term stuff. But that short-term stuff throughout the day led to about 70 points. Most of the day was chopped in a side of 20. So I wouldn't blame anybody for not really doing much in Euro. But it was there. It was there. It was very easily seen to mark top edge. Aussie dollar. Spending a little time looking at currencies tonight. Aussie dollar entered long on the model. So it's a longer term setup, which means we're looking for what? Means we're looking for any dips to buy into if you're short term with the model direction, or if you're just long the model to be long. The model bought it right. I think it was right there. So the model bought spot right here. So the model's in the money, but again, the trade's not closed, and it can do anything from here. We obviously anticipate it working higher. On a shorter term level, this is the analysis coming into the day. Coming into Tuesday, so yesterday, was I still anticipate Aussie being well supported from 75.75 into 76, and I want to buy any dips down to 76.10. So anything that would dip down into this red box, I wanted to be long on a short-term basis for a move higher. And look at what you got. You got your dip, right? You got your dip. You didn't get so much like the most beautiful bottom edge within the dip, but you got your dip to get then rally. Now, Aussie's been pretty tight, but again, laying out your levels. How do I want to be dealing? How do I want to look to trade for the day? I'll give you another one. Crude oil. For any of the commodity or the futures traders, crude oil was actually quite nice because I talked about this level yesterday, had the bottom of it, which was great, but also was very, very well encouraged of what needed to hold up at the top. So knowing what needed to hold, it was not too difficult to look for a target up here. Now, I just really looked at crude oil from a U.S. session, and I'll show you what I saw here in crude oil on the short term. And I'll show you guys how you can approach this from a shorter term basis, not model trade, nothing like that. Although with the model, crude entered long crude oil position last Friday. It entered down here. So crude is sitting in the money on this long model trade. But I want to focus with crude here a little bit more from the day trading section. And here's what I want to look at. I want to look at the European range, kind of this bottom edge European range, and then top edge European range. And that's what I want to diagnose. So you see where I'm pulling it from. I'm just pulling it from the European zone. Once this decided who was going to win this zone, buyers, right? So it challenged top edge, it challenged bottom edge, challenged top edge, challenged bottom edge. It just traded zone. So it was beautiful if you were trading Europe to have that zone lit up. But once it broke the zone, who won the battle? The buyers won the battle at the zone, right? So what I was focused on as US session open was longs down into this zone. So let's look how it played out. Here's early US. So it's already above. In early US, it's already above. So I don't really have an enormous opportunity. I need a pullback. I have to get a pullback if I'm going to get positioned. There's your pullback. Where does that pullback take you? I mean, almost to the tick. What does it do after that? So this is what we have lit up, right? You're able to diagnose this just on a day trading position. But why the direction is so important to me is because the model is long crude oil. So I'm trading a longer term position using some shorter term analysis. And by all means, that was a pretty good movement up there. And it didn't close fabulously above the 45 that I was focused on, but it certainly gave some profit opportunity up above there. And it was nice. So, again, for the 28th of March, as we come to the end of the month, I just wanted to go over a few trades, show you guys a few markets. Hope everybody joins us for the open house Thursday morning, and we can go over this stuff more in depth. But for Mark, and until then, we will bid you farewell. Cheers.